Morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, April 10th. Except for soybean oil, prices across the agricultural space are higher here overnight, seeing some follow-through strength from yesterday's strong close. Yesterday's trade largely impacted by the about-face from the Trump administration by placing a 90-day pause on the reciprocal tariffs against most of our trading partners. The 10% blanket tariff does remain in effect, while tariffs against China, imports from China, they have been kicked up to 125%. So right now it's pretty much brewing down to a battle between the U.S. and China. U.S. stock indices did surge 8 to 12% yesterday, and now backing up a little bit here this morning, down about $1.50 to 1.75% in the overnight futures trade. The U.S. dollar is also sharply lower, flirting with yesterday's lows. At the moment, corn is up 3 to 4 cents. Wheat ranges from 2 to 5 better. In the soybean complex, beans are up 6 to 8. Meal's up $3 a ton, while bean oil has backed off about 30 points. Crude oil is also down about $2 a barrel. Export sales in less than an hour, and we also have the April USDA WASI report at 11 o'clock a.m. Central Standard Time with no major changes expected. I believe just one tariff headline from Washington would likely make today's USDA updates irrelevant. For today's report, I see no changes to bean ending stocks, holding at 380 million bushels. I do expect a 2 to 300 million bushel switch in bean oil usage from biofuels and shifted into exports. I've got wheat ending stocks up 15 million bushels to 834 million, while in corn I see ending stocks slipping 25 million bushels to 1.515 billion, that due to higher exports. The only change I have in South American production is a 2 million metric ton increase in the Brazilian soybean forecast up to 171 million metric tons. Late yesterday, the Rosario Grain Exchange, they raised their Argentine corn production forecast 4 million metric tons to 48.5. This seemingly having little impact on trade here overnight, as they prior to that, this estimate, they were really kind of a big outlier to the downside. This revised forecast is much more in line with the USDA and Buenos Aires Grain Exchange, where their forecast rests at 50 and 49 million metric tons, respectively. Rosario also lowered their soybean production forecast in Argentina 1 million metric tons to 45.5, well below the USDA's 50 million metric ton forecast. Above normal temperatures are starting to build across the U.S. Southern Plains, reaching much above normal readings over the weekend. In the near term, no rain for the plains and western Corn Belt. This will help corn plantings get underway. Week 2 of the outlook does bring better prospects for rain in the southern plains. Cool, damp conditions across much of the Great Lakes region and eastern Corn Belt will look to limit corn plantings in these areas. Much needed rains across south central Brazil are needed before the dry season kicks in next month. It does look like we have better prospects for rain next week. July corn did trade through its March high overnight to the highest level in 6 weeks, challenging technical resistance at its 50-day moving average. We've shed a lot of excess speculative length out of the corn market here over the last 2 months. I do look for old crop prices to continue to gain on a new crop, with U.S. demand expected to remain strong into the early summer months until we get the second Brazilian crop harvest upon us. This despite the lack of buying from China. New highs for July beans for the move here with next overnight, with the next technical resistance 100-day moving average 1037.5. Meals outperforming oil as speculators continue to lighten up on their record short position. And I do look for Minneapolis wheat to outperform the others in the wheat complex here, perhaps looking to buy in a few more acres here this spring. Thanks for listening, everyone. Have a great day.